Hello traders, the title of the video is 7 things about technical market timing one should know. Let's get started, alright? So are you a technical trader? Have you been trying to time the financial markets? Alright, today I want to share with you the 7 things about a technical market timing one should know. Alright, so there are many ways we can time the financial market, but for this tutorial we want to focus on timing the market using technical analysis, the chart analysis alone. Alright, so do not think that this is the only way one can time the financial market, but we are talking about how to time the market as a technical trader. But also, when we are talking about timing the market as a technical trader, there are many ways, again, we can time the market, okay, as a technical trader. But here I want to highlight 7, okay, essential things, okay, a technical trader must know about timing the market as a technical trader, all right? So it's a narrow session today about a technical market timing, all right? Let's get started, all right? So you are a technical trader. I understand that many stock traders are technical traders, all right? Like myself, I'm a technical trader. And we want to know how can we time the market, all right? So we know that for fundamental traders, their weakest point, okay, point is a market timing. So they are very good at analyzing, knowing that this stock should go up or this stock should go down, all right? But they don't know how to time the market. When it comes to market timing, technical traders are well ahead of fundamental traders. So this is our domain, this is our specialty, this is our strong point. But I want to work with you today so you also can start improving, okay, your market timing. Let's get started. First thing first. The first thing that one should know about the technical market timing is that if one wants to buy, all right, one should wait, okay, for the price to turn or the market to turn from bearish to bullish. So how we as a technical trader know that the price, okay, or the financial instrument has turned from bearish to bullish. So if the financial instrument is bearish, technically speaking, it will be in a declining channel, all right? It will be in a declining channel on any time frame. So that's why we know that the financial instrument is bearish. The next step, when do we know that it's turning from bearish to bullish? The financial instrument must come out of that bearish channel and then must form a higher low, okay, above that, okay, declining channel, or must retest that declining channel. As you can see here, I'm on the quarterly chart. I can go to the monthly chart. But you know me very well if you have been following me for some time. If you are scalper, stay with me. You can do this on the 50-minute time frame, on the 3-minute time frame, on the 10-minute time frame. So price in the declining channel, we know that it's bearish. It's out of the bearish channel. We know that it's turning bullish. But if you form the first higher low, after coming out of that declining channel, we know that it's getting a little bit bullish. It's turning from bearish to bullish. How do we know? Because we are using 2 market patterns. Okay, the first one is the declining channel. So if you see here, this is how we know. So the channel has changed from bearish to bullish. You see here the S&P 500. You see here it turned from bearish, okay, to bullish. Now it's in a rising channel. So when we see a declining channel followed by a bullish channel, we want to buy on the edge of the new rising channel. So here you can see that if it pull back here, we want to check the trading volume. There was this surge until you see this one here, corresponding to this volume bar, this candlestick bar here. And also you want to check where did the price form that higher low. Sometimes trader get into trouble. I want to quickly highlight that because it's so important. I don't want this video to be too long, so I'm under time pressure a bit. So You see, so I have too many lines on my chart. I don't want to remove them. My apologies to traders. So suppose you here it is. Okay, so price was in a declining channel. All right, sometimes traders make a mistake. So the price may come out of the channel. All right, it may come out of the channel, but sometimes the price will form the first higher low above the channel. You want to verify. This is very, very important. You want to verify where the price did form that higher low. That higher low very often should correspond to a very important support level. So if you look at the S&P 500, you see here this way pull back, and then we have this bounce up a bit. So after those two candles, but draw a line there. Is it corresponding? So my apologies to trader, I don't want to remove my line, so stay focused please. All right. So here we are. So that's the red line here. So that's where it did form. You see here, so this candle followed by this one, we know that it's turning, so it's out of the channel, now it's turning a bit. So after those two candles are closed, we are now thinking, all right, it's going to go up. So you want to know, where did that first higher low or the retest, sometimes the price retest in the channel is occurring. You want to draw a line there. So look on your left hand side, you see there we see here, look on your left hand side, you see here, the price breaks above, we see this red line from here, breaks above, retest, and went up. So that red line is a support level. It's a very important support level. Sometimes you see here, that's exactly the same level where the S&P 500 retest that level. That okay, it came out of the channel and retest a very important key level. Sometimes you will see that the price may come out of the channel, but where is forming that first higher low is not corresponding to a key level. You need to be very careful about that. All right. So price turning from bearish to bullish, we can time the market looking for an opportunity to buy, and then we use a top-down trading method as a technical trader to trade it. If we want to sell, all right, if you want to sell, again, we want it to come out of a rising channel. Once again, this time we want it to come out of a bullish channel and start going into what? A declining channel. This is about market turning from bullish to bearish. Okay, we want to look for an opportunity to sell. All right, so here normally we should, if you look carefully here, I don't want the video to be too long, so you see here, you see those candles here, these three candles. One million the quarterly chart. This one went up, this one came down, this one went up. You see the orange line is a key level. So as the price break below that orange line, you see this candle back here, it retested. This is the level where you look for an opportunity to sell. Normally you will see, after it came out of the bullish channel, you want to have a clear cut lower high. Here, if it came out of the bullish channel, we want to see the first higher low. Sometimes the price may come out of the bullish channel, then it will form a bullish chart pattern, something like double bottom or an inverted head and shoulder. Here, this is a kind of a double bottom that has been formed here. So if you wait patiently, you will notice that this is a double bottom. Hit this level, try to come back again. Now you know that, okay, after this one here, you start taking it from there. All right. So to time the market to buy, we want the price to come out of a bearish channel and start going to a rising channel, and then we trade along the edge of that rising channel. We want to sell, we want it to come out of a bullish channel and start going in a declining channel. We want to sell on the edge of the declining channel or look for lower highs. Okay, this is about the first thing one should know about technical market timing. Okay, let's move on to the next subject. The next things one should know about technical market timing. This time we want the price to validate a prior high as a support level. All right, so I want to quickly bring on Microsoft stock, and I have one example there. Price validating a prior high as a support level. So here you can see that the price is in a rising channel. Here it's going up. You see, this was a high here for Microsoft. This was a high, yes. So you see, it ran up for a high, pull back. Okay, so after I start changing direction here, we know that this is now a high. Wait for it to show you clearly that it's a high. So this is now a high. See the green line there? So if the price breaks above that prior high, this is a prior high, and confirm it as a support level, see here, it breaks above, retests, see here, pull back, now this one, see this one here, breaks above, retests, and confirm this level as a support level, a prior high has turned into a support level. This is the time to look for an opportunity to buy. Here you see, if we retest it like this, those who understand a top-down trading method, a different time frame trading method, will now position themselves using different time frame to catch this candlestick bar as it's going up. So technical traders can look for an opportunity to buy, to time the market when a prior high is converted into a support level. Look for it on any time frame. You will see. Breaks above, retests a prior high. Price is going up, it pull back, now it breaks above it, now it validate that high as a support level. It's the best time to time the market. Use a top-down trading method to trade it. All right. I don't want the video to be too long. Let's move on to the next. The third thing one should know about technical market timing. This time we are looking for. So I will show you another example about converting a high, a prior high, as a support level. Here again, look at Apple stock. Will you agree that this was a high? You see here, it went up from a high, pulled back. Here it is, it breaks above that high. That's the pink line here. Look what it did here. It pulled back to retest it. Here again, you see it's going up now. It's happening all the time. All right, so pull back to retest a high, use a top-down trading method. If you validate that high as a support level, you will know. You may wonder, George, how do we know that you validate it? If you are using a top-down trading method, as it pull back like this, that's a trading setup. Now, if you receive the signal to buy, then you know that it's now validating it as a support level. All right. So the third thing one should know about the technical market timing is when the price, is validating a prior low as a resistance level. This time I want to show you for this is Verizon stock, right? Price validating a prior low as a resistance level. So if you look carefully here, you see the green line here. So price went up. So this was a low. Yes or no? Do you agree? This one here. So it pulled back, going down, you find a support, change direction here, yes or no? Yeah? Can you see that it changed direction here? So this is a low, all right? Going down from a low, okay? So this is a low. If the price validates that low as a resistance level, right? This is the time to sell. This is the time to implement a top-down trading method to sell. Right. So here it is here. So how do we know that it is validated? So it goes up to that to retest it, that low, prior low. I will say, okay, that's a bearish trading setup. If you receive a sell signal here, this is the time to sell. All right, you see here, prior low has been converted into resistance level. Now, if you want to be sure, you can draw a trend line here, a channel like this. It came out. You see how it came out very fast. Those are, you see this candle here. Those are the professional using a top-down trading method. Because as he retested there, all right, they were using a top-down trading method. There was a signal, on a signal time frame for a quarterly chart. It's a weekly chart or 3-day chart. Then they sold it, and that's why you have this candlestick bar down. So the third thing is about validating a prior low as a resistance level. We want to time the market to sell. In all cases, we use a top-down trading method. We want to move on very fast. The fourth thing one should know about technical market timing is about Elliott wave forecast. All right. So traders that have been following us at 24 Elliott wave YouTube channel, digit 2, digit 4, Elliott waves YouTube channel. All right. You will learn about Elliott wave forecast. Here it is. We are looking at Walt Disney, a company, and this is the Elliott wave hot dose. All right. So here 1, 2, 3. So with the Elliott wave pattern, I will not dwell on this one. I will just mention it to you because it's a big subject. All right. So I'm just going to mention it to you so you don't get confused. Otherwise, the video will be too long. So just understand that the Elliott wave patterns, all right, allow us to time the market carefully. We can forecast any wave. We can forecast the third Elliott wave where it's likely to end, and this will help us to time the market. The Elliott wave principle is a powerful tool to time the market. So area wave trader do not look at the price, they look inside the price structure. By understanding the wave patterns, all right, technical traders can improve their market timing. So the area wave forecast, the area wave patterns, okay, the price structure, okay, talking about the wave principle, allow technical traders to time the market. As you can see here, I see 1, 2, 3, 4. So we will say the fifth area wave. We know now that according to the area wave principle, there is usually equality between the first and the fifth wave. This is a good thing, talking about the length and the magnitude. So we'll say, all right, there's a high chance that for Walt Disney, that the stock may go up to this point here, or, okay, this point here. You see the vertical line. So the magnitude is the height of the price action. The first wave, the length is this one. So it's all heading towards 12584. So with that information, we can also forecast, okay, how far the third area wave can go. All right. So with that, we can time the market. So area wave trader, you can see here, they say first wave, second wave, third wave, fourth wave. They know here as it's coming out here. You see here as it's coming out of this channel here. You see this common settlers couple. They know that this stock has a high chance to go up. This is about the area wave because they're expecting what? The fifth area wave. All right. We don't want the video to be too long. Let's move on. This is the fifth thing one should know about technical market timing is about the predictive fractal. So there is a web page at okay, Day Pro Traders, okay, YouTube channel about predictive okay, fractal. I have, okay, I'm going to write more about that subject. You will only watch videos at the moment, but I have an article about predictive fractal pattern. If I have time, okay, I will put it there, okay, make the page better for you because it's a quite complex subject and it's quite difficult for new traders to engage in predictive fractal, okay, market timing. So I will just mention it to you that, okay, professional traders, technical traders also use predictive fractals, okay, to forecast the financial market. I can quickly give you one example is that if, for instance, we may have, for instance, on the weekly chart, a pattern, something like this. Suppose we have a pattern like this, okay, something like this, all right, a pattern like this on the weekly chart, okay. That pattern that you see going up, we see like this, the exact pattern can copy itself and paste it itself, so to speak, all right, on the quarterly chart. So the pattern is formed first on the weekly chart, we see it, and then on the quarterly chart, we see the same pattern being formed because we have observed the structure of that pattern on the weekly chart. Now we see that there is a correlation between the weekly chart and the quarterly chart. Now the same pattern is being formed on the quarterly chart. So because we know the pattern before, if we see the price reaching this point here, we know that there's a high chance that this move will continue. But it's a little bit complex. There are more work. Okay, I will be writing more about the predictive fractal pattern in the near future. Don't put me under pressure, guys. All right, and I will explain to traders. There are videos at the moment at dayprotrader.com. It's about using the predictive fractal pattern, okay, to time the markets. Okay. Talking about the sixth thing one should know about technical market timing, we are talking about breakouts above or below triangles. All right. Now, I have one example here because I don't want the video to be too long. This is a junction. All right. Breakout above or below triangle. If you are trading or you want to time the market, love the triangles. All right. Breakouts above and below triangle will help us to time the market technically. All right. Technically. Okay, so let's look at Johnson talking about triangle. All right, here we are. So again, here we are. You see, there was this triangle here. You see here, price breaks above the triangle. All right, this will allow us breaks above final support. This will allow us to time this move up, a triangle. It's a warning that anything is possible. As it breaks above it, we use a top-down trading method to catch the move up. This was has happened here. So you may see sometimes price breaks above. It's not very neat here. It's not very neat. It's a bit messy here. All right. Sometimes you breaks above it and retest the triangle, or will form the first higher low above a triangle. In fact, what I would say to trade, whenever you see a higher low above any triangle, all right, use a top-down trading method to trade it. All right. This is a higher low above a triangle, all right, a higher low above a triangle. So a lower high, a below a triangle, that's a sharp trading setup, all right. The triangle are powerful tools, all right, powerful tools. Breakout above a below triangle will help technical traders to time the market, okay, more accurately. All right. So this is about the triangle. I have another example for the triangle. In fact, I have a 3 example of a triangle WMT. Here again, you see a triangle. So there was this first triangle. You see, it breaks above and retests the triangle here. Or a lot of traders do not draw triangle. I encourage traders to draw triangle. Just play with it. Draw triangle. See here, it breaks above the triangle. Retest it here. Now, it didn't go up straight away. Form another triangle. Here again, you see this triangle here. You see. Let's remove the line here. It's not very good. You can see this one try to have a tail. Sometimes you see that one of those candles will have a long tail, try to retest it. Here you see this is the breakout candlestick bar. So if you see this one here, you know how you handle that. You see that it's tall, okay, that candlestick bar there, highlight the high, the low, and the median line of that candlestick bar that is out of the triangle like this. Okay, sometimes you may notice sometimes, okay, you see that the price will try. You see here, this tail was trying to retest the median line of that okay, candlestick bar here. Or you just wait until you see the first higher low above that triangle. All right, we don't want the video to be too long. Another example about a triangle breaking above a triangle. Okay, here again we have a triangle. Okay, see a triangle here. You see my green triangle. This is a McDonald's stock. Again, here it is. See a triangle. That's a triangle. And what do we have here? A higher low above a triangle. Pull back after this candle here. This candle here is closed. Okay, highlight the high, the low, and the median line. You see the following candlestick bar try to retest the median line of this one here. It's happening all the time. Okay, work on it. Okay, as always, you learn something new. Okay. Because sometimes the subject is so exciting, or you're learning for the first time, you want to do it straight away. Don't do that, okay? Assimilate the knowledge, all right? Practice first. Practice first. You go through the motion, you may find different scenario, and you may find some complex scenario, and then you build your skill around it, and then you own it. That's it, all right? So, the 7th thing one should know about okay, technical market timing, all right? So we talk about break above and break below triangle, all right? I do not have any example about breaking below the triangle, but just understand that if we have a triangle and we have a lower high below the triangle, that's a bearish trading setup, or price break below the triangle, retest the triangle, all right, nicely, okay? That will constitute a bearish trading setup. In all cases, we implement different time frame trading method to control the risk, because as a technical trader we can't afford, okay, to ignore, okay, different time frame trading method. Okay, we can't afford to do that. All right. So the last thing, which is the 7th thing one should know about technical market timing, is about breakouts above or below, okay, consolidations. This time I have one example here, Coca-Cola stock. Okay, you see there was a consolidation. You see the consolidation between the red line. Here it is. Breakout above consolidations. You will see that what usually takes place, you see very often we have a trending phase or impulse wave, prior run fast, and then we'll pull back. So if you pull back with okay, high volatility, we know that after high volatility, we have a low volatility. Usually the low volatility will take place in a consolidation. It's during the low volatility that the smart money will buy or sell. All right? They like that because they don't like the market to be volatile when they are taking position. So for that, if the price breaks above a consolidation from a higher low or another manner, breaks above, okay, retest and validate the top of that consolidation as a support level, this is the best time to time the market. Again, we must use a top-down trading method to trade it because the timing is about the signal. So the retest is the trading setup. Breakable, retest, that's the trading setup. The time is when the signal is fired. Now we use another time frame to enter the trade. Here it's a bit difficult. Sometimes you see you break the ball like this, and when this one did not happen here, you will see one candlestick bar will try to have a long tail trying to retest that top of the consolidation. It's nice. So as that you have that situation, it's pulling back near to retest it. That's the time when it's touching the top. That's your trading setup, and then you implement a top-down trading method to catch it before the candlestick bar start pulling back. The reason why you have a long tail is because those who are using a top-down trading method already bought it, and then the price you'll see you quickly push it back up because order has been filled to buy, and then you have that long tail. All right, and they start running away. Here it's not easy. All right, here it's not easy. So those are the 7 things about technical market timing one should know. All right, so to summarize this video, all right, as a technical trader, we want to time the market, all right, very, very important. But there are many ways technical trader can time the market. Now I have selected 7 essential things one should know about technical market timing, all right. So the first one that I was talking about is when the price came out of a bearish channel, all right, and start going in a rising channel. The example that I was showing you was the S&P 500. Okay, we see that it turned, and we want to make sure that where if it come out of the declining channel, all right, and it forming the first higher low above that, forming the first higher low after coming out of the channel, we want that first higher low to correspond to a key level. All right. If you want to sell, we want it to come out of a bearish channel, a bullish channel, come out of a bullish channel, go into a declining channel, or forming a first lower high, okay, after coming out of the channel. All right. All right. The second thing about about market timing, I'm trying to summarize everything, is when the price is validating a prior high, okay, into support level. This is a high probability trading setup. Price going up must fall, higher lows, high. But now if it breaks above that high, retest it, we implement a top-down trading method to time the market as a technical trader. It's happening all over the place. All over the place. Prior high, prior retest, the prior high. All right, so we remember, okay, Apple stock, this was, you see the pink line, this was a high, retest. Implement the top-down trading method, check the economy news, do not violate, okay, the trading triangle, or if you are option trader, okay, timing. If the signal is fired, now buy your call option. All right, but use your technical analysis together with the call option. Don't just buy like old-fashioned traders, option traders that just buy because of the retest. You're a technical trader, you retest, signal is fired, now buy your call option. All right, okay. So the third thing about technical market timing one should know is about price validating prior low as a resistance level. This is what we have been talking about all the time. Break below, retest, turn around. But this time we want a prior low to be converted into resistance level. So at the time when you're retesting it, that's the trading setup. Now if there is a signal to sell at that point in time, now is the time to look for the best entry point to sell. Okay. The fourth thing about technical market timing one should know is about using Elliott wave. Subscribe to 24 Elliott wave YouTube channel. Start learning gradually. You'll be surprised. Okay, start counting wave, play with it. Don't rush. Okay, just go with the flow. Just try to enjoy it. Try to play with it, and then try to be interested in the subject. Once you are interested in the subject, it's like start eating something nice, all right? When you start eating it or enjoying it, or you keep eating, all right? You want more, you want more, you want more, you want more. By the time you know, all right, you are fully fledged Elliott wave trader. Elliott wave pattern to focus the market is powerful. Just counting wave will also help you, okay, to know where we are, what's going on, so you can time the market, all right? Just learn it, all right? You will see on a 5-minute time frame, you will see on a 50-minute time frame, the wave count, 1, 2, 3, 4, 5. You see something clearly neat. Then 1, 2, 3, 4, 5 bearish divergence. Price come out of now. If you come 1, 2, 3, 4, 5 wave, is it turning from from bullish to bearish. Okay, now you know it. The channel, all right, and then you play it. All right, you count 1, 2, 3, 4, 5 waves. All right, in a downtrend, is it coming out of that bearish channel into the rising channel? It's about timing. Use the area wave forecast, learn the area wave pattern, okay, so you may improve, okay, your market timing as a technical trader. The 5th thing one should know about the market timing is a predictive fractal pattern, complex subject. You can go to dayprotrader.com, start to familiarize yourself with predictive fractal pattern. I will be expanding this subject more and more, okay, writing more about this subject, okay. Predictive fractal pattern, all right. Pattern is formed on one time frame. The same pattern is being formed on another time frame. If you are a new trader, you are learning predictive fractal pattern. I encourage you to practice. Don't rush with it. It looks very simple. It looks very easy, but it's not that easy. Okay. The 6th thing one should know about technical market timing. All right, it's about breakout above and below triangle. Don't forget that triangle, powerful triangles. See a triangle? Just wait patiently. Very powerful to time the market, okay? And in all cases, use a top-down trading method. All right, so talking about the triangle, I'll show you WMT. Okay, my triangle all over the place. Here again, it's a McDonald's stock, a triangle, high and low, okay? Timing the market with a breakout above or below triangle. The 7th thing about the market timing, okay, technical traders should know, is a breakout above or below, okay, consolidation. That's the bread and butter of technical trading. Consolidation, breakout, retest. Use a top-down trading method to trade it. Okay. If you have any question or suggestion, all right, this is the time to put in the comment section. In due course, I will be recording another video, all right, to answer your specific question. My apologies to trader. I want to keep this one like 15 minutes. Now I went to 30 minutes. I hope you have enjoyed the video, all right. You find it useful, and we put into use to improve your technical market timing. Okay. We are the TSTW24 traders talking about 7 things about technical market timing one should know. Happy trading to you all and speak to you soon.